Good morning, everyone. How are you feeling today? Welcome to my class today on the YouTube channel of Unacademy on MOA and AOA and its importance. But before we can start the session, I would like to welcome you to Unacademy, India's largest online learning platform that provides to you a world of courses, resources, content, live and recorded sessions to help you in your preparation for the CA Foundation and intermediate examinations. And I would also like to welcome you to crack CA exams with us, which is a vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit of preparation for the CA Foundation and Intermediate examinations by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Welcome to my session today once again. Before we proceed, a brief introduction about the educator today. Hello, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and associate member of the Institute of Company Secretaries of India, and also a law graduate from Karnataka State Law University. I'm currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students, both offline and online. Prior to starting on my own, I worked with S.R. Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global in the Audit and Assurance Department, and then I went on to work with EY India in the Mergers and Acquisitions Department. Finally, I went on to work with the Manipal Group in Bangalore as the corporate controller of their Indian entity as well as their German subsidiary located in Frankfurt, Germany, and it was only after I got back from Frankfurt, Germany that I decided to start something on my own. All right. Just give me a second. Okay, so it was only after I got back from Germany that I decided to start something on my own, and that gave me an opportunity to become an educator, which in turn has given me this opportunity to take this session for you young, fine and bright CA aspirants. Thank you so much for giving me this opportunity, and I hope you find the session useful. Now, anytime during the session, in case you have any questions, queries, observations or discussions to be made, please do not hesitate to drop in a line and I will be happy to take up the matter for problem solving or for discussion purposes as the case may be as soon as possible. Also, before we proceed, I would quickly like to draw your attention to my name, which is Prathik Gupta, and the spelling of my name. So my name is spelled as Prathikgupta. It's Prathik with an H. So why I'm stressing on the spelling of my name is because a lot of people miss the H in my name, because of which they are unable to find the many sessions that I've taken on the YouTube channel of Unacademy as well as the special classes on the Unacademy Learning App. So using this name Prathik Gupta, you can look me up on the Unacademy Learning App as well as the YouTube channel of Unacademy to find the many hours of classes that I've taken for the exclusive benefit of CA Foundation and intermediate students. Alright, let's move on. Okay, now like I told you, Unacademy caters to you in your preparation for the CA Foundation and intermediate examination. It does so through three platforms, that is YouTube, Special and Plus. Now YouTube and Special classes are absolutely free of cost, but they provide you tremendous value and resources to help you in your preparation for the CA Foundation and intermediate examinations. YouTube are what you're watching now, where you just need to go onto the YouTube channel and type in Prathik Gupta and you can see all my classes on the YouTube channel of Unacademy. Special classes are also free of cost, but they provide you amazing amount of resources. They are available on an app known as the Unacademy Learning App, more about which I will tell you further. Talking about the Plus platform of Unacademy, the Plus platform of Unacademy is the premium platform of Unacademy that is a payment-based subscription model and which provides various subscription packages for the various examinations. More about the subscription packages in the following slides. But in this slide, I will quickly tell you why I recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible. The first reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the daily live classes it provides, where you get to chat with your educator, engage in discussions, ask your doubts and answer polls, all this while the class is going on. The second reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the live tests and quizzes it conducts on a regular and periodic basis, which help in evaluation of your preparation and also get a detailed analysis of your performance. The third reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the structured courses it provides, where all the courses on the Plus platform are structured in line with your exam syllabus to help you best prepare for it. And lastly and most importantly, the reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the unlimited access it provides, where one subscription gets you access to all our live and recorded courses to watch from the comfort of any of your devices. So keeping all these advantages in mind, among many others, I strongly recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible in order to accelerate and enhance your preparation for the CA Foundation and intermediate examinations. Moving on. Now, in the previous slide, you heard me say live and recorded sessions. So those live and recorded sessions are nothing else but live and recorded special classes and live and recorded plus courses. So if you're wondering where are these live and recorded sessions, that is plus courses and special classes available, they are available on an app known as the Unacademy Learning App. So for those of you who have downloaded the Unacademy Learning App and are using it, I thank you very much, and I request your support in the future as well. For those of you who have not yet downloaded the Unacademy Learning App, I request you to go to the Play Store on your mobile phones, download the Unacademy Learning App, install the Unacademy Learning App on your phones, put in your mobile number where you will get an OTP, and using that OTP you can register on the Unacademy Learning App. It is as simple as this with no lengthy or complicated procedures. Now the next question you might ask me is, okay, you've downloaded, installed and registered on the Unacademy Learning App, so what's next? So let me tell you that the Unacademy Learning App gives you access to all the live and recorded special classes that Unacademy has to provide to you to help you in your preparation for the CA Foundation and the intermediate examination. And it also provides access to all the live and recorded plus courses that Unacademy has to offer to you in order to accelerate and enhance your preparation for the CA Foundation and intermediate examinations. So keeping these points in mind, I request you all to download, install and register on the Unacademy Learning App as soon as possible so that you can make use of the world of resources that Unacademy has to offer to you to help you in your preparation for the CA Foundation and intermediate examinations. Moving on, this is an important slide. Now, like I told you, the Plus platform of Unacademy is the premium platform of Unacademy, that is a payment-based subscription model and which provides various subscription packages for the various examinations. So accordingly, the CA Foundation and the intermediate subscription packages provided by the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months and 24 months. The 1 month package costs you rupees 3,500. The 3 months package will cost you rupees 8,750. The 6 months package will cost you rupees 14,000. The 12 months package will cost you rupees 17,500 and the 24 months package will cost you rupees 21,000. Now please remember, all these are the listed price of the packages, so before you make the payment for the package of your choice, please do not forget to use the code Prathik to get an instant discount of 10% on the above listed price. I repeat, please do not forget to use the code Prathik, Prathik, that's me, to get an instant discount of 10% on the above listed price. So the after discount price of the various packages are as follows. The 1 month package will cost you rupees 3,150. The 3 months package will cost you rupees 7,875. The 6 months package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750 and the 24 months package will cost you rupees 18,900. So you see, immediately you're getting a savings of 10% when you use my code. Please note that this 10% discount is applicable till March 31st. From Feb 28th, I'm sorry. From March 1st onwards, it will be reduced to 5%. So if you have made up your mind or you're thinking of taking the Plus subscription, this is the time for you to go for the Plus subscription. But please do not forget to use the code Prathik before you make the payment. Now, I personally suggest you to start off with the 12 months or 24 months packages for 2 reasons. Firstly, it is cost effective. If you notice, if you compare the 1 month package cost with the per month cost of the 12 months and 24 months package, you will see that you're getting great cost savings almost immediately. And secondly, and most importantly, since the CA Foundation and intermediate course is provided to you in one package, that is 12 months or 24 months, a 12 months or 24 months package will be highly beneficial to you because it covers the duration of both your courses, that is your CA Foundation and the intermediate, which normally take a minimum of about 12 months for you to prepare and clear. So if you're getting a package that is 12 months or 24 months covering the entire duration of your CA Foundation and the intermediate examinations at a very cost-effective price, I think that is a very good deal. But having said this, you're free to choose the package of your choice. But before you make the payment, please do not forget to use the code Prathik to get an instant discount of 10% on the above listed price. You can also make use of the no-cost EMI options available for the 6 months, 12 months and 24 months packages, just in case you do not wish to make the entire payment at one shot. The payment options available to you are internet banking, debit card, credit card, and also all the coins that you've accumulated by watching the special classes can be redeemed while making the payment for your Plus course. So keeping all these packages, incentives, and discounts in mind, and also the advantages I told you a couple of slides earlier in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible in order to accelerate and enhance your preparation for the CA Foundation and intermediate examinations. Okay, then, like I told you, the Unacademy Learning App gives you access to all the live and recorded special classes. Here are the snapshots of few of the many special classes that I have conducted on the Unacademy Learning App. You have special classes on the revision test paper, Sale of Goods Act, Indian Contracts Act, revision on sale of goods on approval or return basis, fundamental of accounting, retirement of partner, death of partner, admission of partner, valuation of inventories, and revision on final accounts of non-manufacturing entities, and many more. So all you need to do is just log into the Unacademy Learning App, go to my profile, Prathik Gupta, and start making use of the hundreds of special classes that I've taken there exclusively for your benefit. Alright? Then, here are the links to few of the many special classes that I have conducted on the Unacademy Learning App. You can either click on these links or you can copy and paste these links on your browser to take you directly to the special class on the Unacademy Learning App. There is special class on the Indian Contracts Act, the Sale of Goods Act, the Indian Partnership Act, the Limited Liability Partnership Act, the Basics of Communication, accounting concepts, revision test papers, and many more. So like I told you, please log into the Unacademy Learning App, go to my profile Prathik Gupta so that you can start making use of all these sessions that are there exclusively for your benefit. Alright, so today's session is going to be the importance of MOA and AOA. Okay, so all of us know, so let's start off with this, but before we can go on to that, what is the MOA and AOA? MOA stands for Memorandum of Association and AOA stands for Articles of Association. Together, the MOA and AOA are two of the most important documents of a company as they define the whole character of the company, their functioning, their scope, both internally as well as externally, what their scope is. Everything is defined and governed by the two documents known as the Memorandum of Association and the Articles of Association. Okay, so before we get into what is an MOA and AOA, let's look at a little bit about the formation, about what is the procedure, formation of a company, because the MOA and AOA are drafted right at the incorporation stage of the company. Whenever a company is being incorporated, the MOA and AOA need to be drafted with by the people who are making the company. Of course, if they want, they can take the help of a professional who drafts the MOA AOA for them, and then that is submitted to the registrar of companies of the state in which the registered office of the company is proposed to be situated. And then if the ROC thinks that if there's something wrong or there's something needs to be changed in the MOA and AOA, he'll send it back and along with the changes that need to be done, and he'll give you a particular date, time that within which those changes are to be made, and then the company is supposed to make those changes and submit it back to the ROC. So once the ROC finds that the MOA and AOA are all okay, then he will approve the incorporation of the company, and then from the minute they are incorporated, the MOA and AOA become two of the most important documents of the company, and also at the same time, the minute the MOA and AOA are approved and the company is incorporated, the MOA and AOA become public documents under section 399 of the Companies Act 2013. Okay, public documents means they are open to inspection by the public. Anyone who wants to deal with the company or wants to know more about the company can pay a nominal fee to the ROC, 50 or 100 rupees, and I think so. And the last fees, it was that, and then he can obtain a copy of the MOA and AOA. So they become public documents. Okay, so let's quickly have a look at the scope or the provisions relating to formation of a company. I have taken various sessions exclusively on the Companies Act 2013 where we've discussed everything in depth. So in case you've missed it, you can always go back to the archives on YouTube as well as the special classes on Unacademy and Unacademy Learning App and see the sessions taken on Companies Act 2013. Okay, so the Companies Act 2013, where's the pointer? The Companies Act 2013 deals with the basic requirement with respect to constitution of the company. So basically, this is again the basics. Any private limited company can start off with a minimum of 2 directors or 2 members. A public limited company can start off with 7 or more people. The minimum number of people in a private limited company is 2, whereas in a public limited company it is 7. And the maximum number of people in a private limited company is restricted to 200. And the maximum number of people in a public limited company, there is no restrictions. Okay. So in case of a public company, any 7 or more persons can form a company for any lawful purpose by subscribing their names to the memorandum. Even here you see memorandum is the important term. So the subscribers need to subscribe their name to the memorandum of association and complying with the requirements of this act in respect to registration. In exactly the same way, 2 or more persons can form a private limited company, and 1 person, where the company to be formed is a 1-person company. So we saw the breakup of the different kind of companies. A 1-person company will require minimum 1 person or a maximum 1 person. A private limited company will require a minimum of 2 people and maximum of 200. A public limited company will require a minimum of 7 people and maximum there is no limit. So all these people can come together. They can subscribe their name to the MOA. Okay, so from now on, Memorandum of Association will be known as MOA and Articles of Association will be known as AOA. Okay, just for ease of talking. Okay, are we clear? Okay, then now let's look at the steps for incorporation of a company. What are the various steps that need to be taken for incorporation of the company? Filing, the most important thing, filing of documents and information with the registrar. For the registration of the company, the following documents and information are required to be filed with the registrar within whose jurisdiction the registered office of the company is proposed to be situated. So basically, if your registered office is coming up in Bangalore, then you have to file the incorporation documents with the ROC Karnataka, because that is the state in which the registered office of your private limited or public limited company is proposed to be situated. Okay, now following other documents. So if you see the first point itself, the memorandum and articles of the company duly signed by all the subscribers to the memorandum. Okay, so the memorandum and articles of a company are so the memorandum and articles of the company are duly signed by all the subscribers to the memorandum. So basically, right at the time of incorporation of the company, you need to draft the memorandum and articles of a company, take the help of a professional, and then you can submit that to the ROC for approval. A declaration by a person who is engaged in the formation of a company, that is an advocate, a chartered accountant, a cost accountant, or a company secretary in practice, and by a person named in its articles of association as a director, manager, secretary of the company, that all the requirements of this act and rules made thereunder in respect of registrations and matters precedent or incidental thereto have been complied with. So basically, you have to give a declaration, right? Now, I told you in the beginning itself that when you are incorporating a company, you will have to take the help of a professional in terms of certifying the documents, and you might also need him for the purpose of preparation of your articles or memorandum of association. And who is a professional here? It could be an advocate, a chartered accountant, a cost accountant, or a company secretary in practice. Also, a declaration has to be given by both of them saying that whatever are the requirements of the Companies Act with regard to incorporation of the company have been duly complied with, and nothing has been left over. And at the same time, whoever is being mentioned or designated as a director of the company will also have to give a declaration that all the requirements of this act and rules made thereunder in respect of registration and matters incidental or precedent thereto have been complied with. Okay, please take 2 minutes, go through this. Any questions, please ask me. This is just the introduction, the lead up to where we'll start the topic with memorandum and articles. Please take 2 minutes. Let me know once we're done, please. Okay, now once the registrar finds all the documents, your KYC documents, your address proofs, your MOA, AOA, everything is in order, he will approve it. But in case he finds something missing, then he can always send it back and ask the person submitting it to make the corrections and submit the rectified documents. Okay, then we have the issue of certificate of registration. The registrar, on the basis of documents and information filed, shall register all the documents and information in the register and issue a certificate of incorporation in the prescribed form to the effect that the proposed company is incorporated under this act. Okay, so once he finds everything in order, he will enter the name of the company in the register and he will issue a certificate of incorporation. Once the certificate of incorporation is issued, the company is also allotted a corporate identity number, which is a number distinct to that company and it is not common to any other company. On and from the date mentioned in the certificate of incorporation, the registrar shall allot to the company a corporate identity number, which shall be a distinct number identity for the company and which shall also be included in the certificate. The maintenance of copies. So whenever the company is incorporated, whatever documents that the company has submitted, which includes MOA and AOA most importantly, need to be maintained at the registered office of the company. So the company shall maintain and preserve at its registered office copies of all documents and information as originally filed till its dissolution under the Act. So they need to maintain these at its registered office. Furnishing of false or incorrect information or suppression of material fact at the time of incorporation. If any person furnishes any false or incorrect particulars of any information or suppresses any material information of which he is aware in any of the documents filed with the registrar in relation to registration of the company, he shall be liable to action for fraud. So whether it's a professional or whether it's the person named in the articles as the director of the company or secretary of the company, if there is any furnishing of false or incorrect information or suppression of material fact at the time of incorporation, then such person will be liable under fraud. Okay, please take 2 minutes, go through this. Any questions, please ask me. Please take 2 minutes. Any questions, please ask me. Let me know once you're done, please. Take another minute, please. Okay, now let's start off with what do you mean by Memorandum of Association and Articles of Association. Please remember, the Memorandum of Association and the Articles of Association are two of the most important documents for any company. Okay, the Memorandum of Association of a company, in fact, is charter. It defines its constitution and the scope of the powers of the company with which it has been established under the Act. It is the very foundation on which the whole edifice means the whole foundation on the whole foundation of the company is built. So you can imagine how important this document is. Okay, so it defines the constitution as to what is the company formed to do, what are the activities, the scope or the powers of the company. That means what are the activities the company can carry out, with which has been established under the Act. It is the very foundation on which the whole edifice of the company is built. So the object of registering a Memorandum of Association. Now let's look at what is the object of registering a Memorandum of Association. Firstly, it contains the object. This is the most important one. It contains the object for which the company is formed and therefore identifies the possible scope of its operations beyond which its actions cannot go. So one of the most important functions of the Memorandum of Association is that it defines the scope of activities beyond which its actions cannot go. That means beyond which it cannot perform activities. So whatever activities the company intends or proposes to perform have to be mentioned in the Memorandum of Association. If there is any activity not mentioned in the memorandum of association, then that company cannot carry out that activity. Okay, then it enables, the second one, it enables shareholders, creditors, and all those who deal with the company to know what its powers are and what activities it can engage in. A memorandum is a public document under section 399 of the Companies Act 2013. Consequently, every person entering into a contract with the company is presumed to have knowledge of the conditions contained therein. So please remember, now a company cannot work in isolation, right? There are various external people who work with the company. Now, who are the external people who work with the company? Can you tell me? Who are the external people who work with the company? The external people could be vendors, it could be creditors, it could be investors, it could be bankers. Okay, so obviously they would want to know what are the powers and what is the scope of activities that the company can perform. So that information is given to them from the Memorandum of Association. And like I told you earlier, a Memorandum of Association is a public document under section 399 of the Companies Act 2013. So consequently, every person entering into a contract with the company is presumed to have knowledge of the conditions contained therein. This is known as a doctrine of constructive notice, which we will discuss a little further. Okay, this is another important doctrine connected to the MOA and AOA, which we will discuss a little further. There are 3 or 4 important doctrines when it comes to the Memorandum of Association. That is your Doctrine of Ultrawise, Doctrine of Constructive Notice, and the Doctrine of Indoor Management, which we will have a discussion about later in this session. Okay, so now, why do you think the debtors and the creditors, the customers, the bankers, investors would want to have a look at the MOA and AOA of the company? Why do you think so? Why do you think they would want to have a look? Because they would want to see if there is any activity which the company is not allowed to do by the MOA. If the company is doing that, that company will be known as ultra-wise. We will discuss this, but that activity will be known as ultra-wise, the company or the MOA of the company, and it will be absolutely invalid. So any external person who has been dealing with the company, it is very important for them to have a look at the MOA and AOA before they start work with the company, because if they carry on work without actually looking at the MOA and AOA, and tomorrow if that activity was not allowed to be performed as per the MOA of the company, then the external people will stand to lose. So it's very important. The shareholders must know the purpose for which his money can be used by the company and what risks he is taking in making an investment. Now, who is a shareholder? A shareholder is a person who invests into the equity or preferential capital of the company. So mainly let's talk about equity shareholders. Now, equity shareholders are considered as owners of the company. So obviously, if someone is putting in their hard-earned money into the company, they would want to know where their money is heading, right? For what purpose the money is being used, whether it's being used for a proper purpose, whether it's being used for a wrong, unlawful or fraudulent purpose, or what is the purpose. So from where will they get that information? कहाँ से मिलेगी वो information? That information will be contained in the Memorandum of Association as to what are the activities that the company is allowed to carry on and what are the activities for which the money of the shareholders can be used. So this is the place where the shareholders can get their information. Please take a minute, go through this. Any questions, please ask me. Any questions, please ask. Take another minute, carefully go through this. I'm just giving you time to read it carefully and understand it, and ask me any questions you may have. Okay, take 10 more seconds and then we proceed. Okay, then now to make it easier for the people who are incorporating the company and for people who are who do not know much about the memorandum and articles of the company, there are various formats provided under the Companies Act 2013, which is contained in Schedule 1 of the Companies Act 2013. So there is a memorandum of the company is given in tables A, B, C, D, E in Schedule 1 to the Companies Act 2013. Okay, so basically why these things are given is because if you follow these model MOAs as much as possible, there is a very little chance that you will miss out on any important provision of the MOA that is not included in your MOA. Okay, so it's always advisable that your MOA is as close to these model MOAs as far as possible. It's simply because these model MOAs ensure that you haven't missed out any important or major point. All right. Okay, so table A is the format of Memorandum of Association Limited by Shares. Now, what is the company limited by shares? Can anyone tell me what's the company limited by shares? Can anyone tell me? Okay, a company limited by shares means a company in which the liability of the members is limited to the extent of amount unpaid on the share capital held by them. So in case they are holding 10,000 shares of rupees 10,000 each, on which only 8 rupees has been paid up, then their liability is only the remaining 2 rupees that they need to pay on those shares. So it will be 10,000 into 2, 20,000 is the maximum liability that is there for those people. Okay, so for company limited by shares, they can follow table A for the memorandum of association. Now let's look at table B. Table B is a form of memorandum of association of a company limited by guarantee and not having a share capital. Now what is a company limited by guarantee? A company limited by guarantee is simply a company in which the liability of the members is limited to the extent they have guaranteed in the MOA at the time of incorporation. That means the members would have subscribed to the memorandum, have said that in the case the company is wound up or it goes into liquidation, at that time I will pay so much X amount as guaranteed amount. So there his liability is maximum to that extent only. Table C. So table C can be used by a company for the memorandum of association of a company limited by guarantee and having a share capital. So any company which is limited by guarantee and having a share capital can use table C, the memorandum of association given in table C. Then table D is the form of a memorandum of an unlimited company. An unlimited company is such a company in which the liability of the members is unlimited, but this unlimited liability comes for members in two situations only. When during the life of the company, if the member is there, and this liability can be evolved or evoked only at the time of liquidation of the company, not before that. So a company, an unlimited company can follow table D for the memorandum of association. Table E is a memorandum of association of an unlimited company and also having a share capital. So these are the basic model forms of MOA and AOA given by the Companies Act 2013 for the different types of companies and the different liabilities of the companies. The memorandums and articles of a company must be close to model forms as possible depending upon the circumstances. This I told you because if they are as close as possible to the model forms, then it will ensure that all the important aspects of the memorandum or the Companies Act is captured. Okay, please take 2 minutes, go through this. Any questions, please ask me. Please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask me. Any questions, please ask me. Please take another minute. Okay, now let's look at the contents of the memorandum. The first one is the name clause, which contains the name of the company. Okay, this is known as the name clause. There are 6 clauses in a memorandum of association. A, the name clause, the name of the company with the last word limited in the case of a public limited company, or the last words private limited in the case of a private limited company. This clause is not applicable on the companies formed under Section 8 of the Act. The Section 8 companies are charitable companies, which are companies formed for charitable purposes. The name including phrase electoral trust may be allowed for registration of companies to be formed under Section 8 of the Act in accordance with the Electoral Trust Scheme 2013 notified by the Central Board of Direct Taxes CBDT for the companies. For the companies under Section 8 of the Act, the name shall include the words foundation, forum, association, federation, chambers, confederation, council, electoral trust, and the like, etc. The company's incorporation rules. So basically, whatever is the name of the company, whether it's a private limited company, it shall have the words private limited. A public limited company shall have the words in the end limited. A Section 8 company is exempted from the usage of private limited or limited at the end of its name. So it can use names such as electoral trust, confederation, chambers, federation, association, forum, and everything, of course, after the approval from the central government. Only after that they can use the name given like that to the Section 8 companies. So like I told you, Section 8 companies are basically charitable. Okay, so even your Section 8 companies will have your memorandum and articles of association. Alright. Then as per MCA notification dated 5th June 2015, a government company's name must end with the word limited. In the case of one person company, the word OPC should be included below its name. So for like I said, for a private limited company, it should end with the words private limited. For a public limited, it should end with the words limited. For an OPC, one person company, the name should end with the words OPC. Okay. The second one is the domicile clause. That is the state in which the registered office of the company is situated. The state in which the registered office of the company to be situated. That means if it is situated in Bangalore, this will say that the registered office of the company is situated in the state of Karnataka. If it's Mumbai, it will say Maharashtra. If it's Chennai, it will say Tamil Nadu, and so on. Please take a minute, go through this. Any questions, please ask. Any questions, please ask me. Please take 2 minutes, go through this. Are we done? Let me know, please, once we're done. Okay, then the third one and the most important clause in the memorandum is your object clause. So the object for which the company is proposed to be incorporated and any other matter considered necessary for furtherance thereof. That means what are the main objectives or activities for which the company is incorporated, and what are the other activities that should be undertaken by the company in order to achieve those main objectives should be all mentioned in the object clause of the memorandum. If any company has changed its activities which are not reflected in its name, it shall change its name in line with activities within a period of 6 months from the change of activities after complying with all the provisions that are applicable of change in name. So please remember, under the Companies Act 2013, there is also a requirement that the name of the company should reflect the main activities that you intend to perform. For example, if it's an infrastructure company, okay, if it's an infrastructure company, it should say ABC Infra Private Limited or ABC Builders Private Limited or ABC Private Limited. So the name of your company should reflect the main activities of the company. Okay, so in case there is any activity that is being changed into the object clause of the Memorandum of Association and that activity does not reflect in the name of the company, then the name of the company needs to be changed within a period of 6 months from the change of activities after complying with all the provisions as applicable to the change of name. Okay, so but your name has to reflect, like for example, you cannot have a company saying ABC Infotech Private Limited and then carry that company carrying on the business of infrastructure or furniture or food and beverage. So your name of the company should reflect the main activities your company is planning to perform. And in case your name doesn't reflect so, the name of the company has to change in the 6 months given. The third clause is the liability clause. The liability of the members of the company, whether limited or unlimited, and also state in case of a company limited by shares that the liability of the members is limited to the amount unpaid, if any, on the shares held by them. In the case of company limited by guarantee, the amount up to which each member undertakes to contribute, and to the assets of the company in the event of it being wound up while he is a member or within 1 year after he ceases to be a member for payment of such debts and liabilities of the companies or such other debts and liabilities as may have been contracted before he ceases to be a member, as the case may be, to the cost and expenses of winding up and for adjustment of the rights of the contributories on themselves. So basically the liability clause will contain information about what kind of a company it is, whether it's a company limited by guarantee, limited by shares, or an unlimited company. Please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Please take a couple of minutes. Carefully go through this. Take another minute, please. Just give me a minute, someone's at the door. Right, let me know once you're done, please. Any questions? Please ask. Are we done? Any questions? Please ask me. Okay. The next clause is the authorized capital clause. That is the amount of authorized capital divided into share of fixed amounts and the number of shares which subscribers to the memorandum have agreed to take, indicated opposite their names, which shall not be less than one share. A company not having share capital need not have this clause. It is to be noted that a company being a legal person can, through its agent, subscribe to the memorandum. However, a minor cannot be signatory to the memorandum as he is not competent to contract. The guardian of a minor who subscribes to the memorandum on his behalf will deem to have subscribed in his personal capacity. So basically, in the next one is your capital clause, which just simply mentions the authorized capital of the company. What is the authorized capital of the company and broken up into how many shares? Please take a minute, go through this, and then we proceed. Any questions? Please ask. Hi Chirag, how are you? Any questions you have, please ask me. Take another minute, let me know once you're done. Alright, then let's look at the Articles of Association. So we discussed about the memorandum and its contents and its importance. Now let's talk about the Articles of Association. The Articles of Association of a company are its rules and regulations. That means the internal rules and regulations are bylaws of the company. Okay? Which are framed to manage its internal affairs. The important point here is internal affairs. Just as the memorandum contains the fundamental conditions upon which the company is allowed to be incorporated, so also the articles are the internal regulations of the company, and this is supported by Guinness versus Land Corporation of Ireland. These general functions of the articles have been aptly summed up by Lord Keynes in Ashbury Carriage Co. versus which is as follows. The articles play a part subsidiary to the Memorandum of Association. They accept the memorandum as the Charter of Incorporation, and so excepting if the articles proceed to define the duties, the rights and powers of the governing body as between themselves and the company, and the mode and form in which the business of the company is to be carried on, and the mode and form in which changes in the internal regulation of the company may from time to time be made. Now please remember, like the Memorandum of Association defines the external scope of the company, the activities of the company, the state, the name and everything. The Articles of Association gives the internal regulations of the company. Okay, it is like the bylaws which gives the rules and regulations and the procedures for the internal management of the company. That is all governed by the Articles of Association. Alright, please take a minute, go through this. Any questions, please ask me. Any questions? Please ask me. Take another minute. Any questions? Please ask me. Okay, now let's look at the differences between Memorandum of Association and the Articles of Association. The objectives. The Memorandum of Association defines and delimits the objectives of the company, whereas the Articles of Association lays down the rules and regulations for the internal management of the company. So basically the Articles of Association, a Memorandum of Association defines the scope and the activities of the company, whereas the Articles of Association gives down the rules and regulations for the internal management of the company. The relationship, the Memorandum defines the relationship of the company with the outside world, and the articles define the relationship between the company and its members. Okay, so like I said, the Articles of Association is an internal document, the Memorandum of Association is an external document. Alteration. The Memorandum of Association can be altered only under certain circumstances and the manner provided in the Act. In most cases, permission of the regional director of the tribunal is required. The articles can be altered simply by passing a special resolution. So even when it comes to the alteration, please remember the Articles of Association is a more simpler way of altering the Articles of Association than a Memorandum of Association. For a Memorandum of Association to be altered, normally the permission of the regional director or the tribunal or the ROC is required, whereas in the case of alteration for Articles of Association, it can simply be altered by passing a special resolution and filing with the ROC the copy of the special resolution. Okay, so these are the main differences between the Memorandum and Articles of the Association, and so far we've also seen what are the contents, what are the MOAs and AOAs, and going further from now on, we'll also discuss a few of the doctrines. We'll discuss the doctrines of Ultrawise, the doctrine of constructive notice, and the doctrine of indoor management, which are all associated with the AOA and MOA and signify their importance. Okay, please take a minute, go through this. Any questions, please ask me. Please take a minute more. Any questions, please ask me. Please take another minute. Any questions, please ask me. Take another minute, please. questions? Please ask me. Okay, now let's talk about the doctrine of Ultrawise. Okay, now we've already discussed what the MOA AON means, so now let's go on to important doctrines that are associated with the MOA and AOA and rely on them. The meaning of the term ultrawise simply means beyond their powers. The legal phrase ultrawise is applicable only to acts done in excess of the legal powers of the doers. So if any person has any powers and he does any act which is in excess of the powers given to him, that act is known as ultrawise. This presupposes that the power in their nature are limited. It is the fundamental rule of company law that the objects of the company as stated in the memorandum can be departed from only to the extent permitted by the act. Thus far and no far. That means whatever activities are mentioned in the object clause of the memorandum of association, the company can do only those activities. They cannot deviate beyond that. In consequences, any act done or a contract made by the company which travels beyond the powers, not only of the directors but also of the company, is wholly void and inoperative in law and is therefore not binding on the company. So basically, this doctrine of ultrawise simply means if you carry on any activity which is not mentioned in the memorandum of association of the company, then that is said to be an act ultrawise the company, and it is not binding on the company. The company the company will be not bound by the activities, by such activities which ultrawise the memorandum or articles of the company. On this account, a company can be restrained from employing its funds for purposes other than those sanctioned in the memorandum. Likewise, it can be restrained from carrying on a trade different from that it is authorized to carry on as per its MOA. Okay, so a company can carry out only those activities which it is permitted to carry on as per its MOA, and it is not allowed to carry on any other activity which is not mentioned in the MOA. And that is what you mean by the doctrine of ultrawise. It simply means doing more than the powers given to you. Please take a minute, go through this. Any questions, please ask. Any questions, please ask me. Are we done? Okay, now let's have an introduction to the doctrine of ultrawise again. Companies have to borrow funds from time to time for various projects in which they are engaged. Borrowing is an indispensable part of the day-to-day transactions of a company, and no company can be imagined to run without borrowing from time to time. So basically, every company, if it wants to grow, it has to borrow money. There is a limit up to which the promoters can pump in money, but beyond a certain point, if the company wants to grow, it has to borrow money. So borrowing is an indispensable part of the day-to-day transactions of a company, and no company can be imagined to run without borrowing from time to time. Now, balance sheets are released every year by the company, and you will hardly find any balance sheet without borrowings in the liabilities clause of it. So if you actually observe the balance sheets of most of the companies, you will hardly find any balance sheet without borrowings in the liabilities side of it. However, there are certain restrictions while making such borrowings. If companies go beyond their powers to borrow, then such borrowings may be deemed to be ultrawise. So a company can borrow only if that borrowing power is contained in the memorandum of association of the company and not otherwise. So if the company does not have borrowing mentioned in its object clause in the memorandum of association, then such borrowings may be deemed to be ultrawise, and if they are ultrawise, those will be absolutely invalid. Those transactions will be invalid and unenforceable in the court of law. That is what you mean by ultra-wise. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Let me know once we're done, please. Yep, take about 30 seconds more. Let me know once you're done. Okay, now what is the meaning of ultra-wise? It is a Latin term made up of two words, ultra, which means beyond, and wise, meaning power or authority. So ultra-wise simply means beyond one's power or authority. So we can say that anything which is beyond the authority or power is known as ultra-wise. In the context of the company, we can say that anything which is done by the company or directors which is beyond their legal authority or which was outside the scope of the object of the company is ultra-wise. So in simple terms, ultra-wise means anything that is done beyond the powers that has been given to one person. So, and any act that is done beyond the powers given to you is absolutely invalid and cannot be enforced by law. Okay, please take 30 seconds, go through this, and then we proceed. Any questions, please ask me. Let me know once we're done, please. Take about 30 seconds. Okay, now let's look at again the Doctrine of Ultrawise. The Memorandum of Association is considered to be the constitution of the company. It sets out the internal and the external scope and area of company's operation along with its objectives, powers and scope. So basically the memorandum, like we discussed earlier, the memorandum defines the objectives and the scope of the company's operations. A company is authorized to do only that much which is within the scope of the powers provided to it by the Memorandum of Association. A company cannot go beyond the powers and the scope of activities as mentioned in the Memorandum of Association. A company can also do anything which is incidental or to the main objects of provided by the memorandum. Anything which is beyond the objectives authorized by the memorandum is an ultra-vires act. So basically, that is the reason why we say the most important document in the in the company is the Memorandum of Association, and the most important clause in the Memorandum of Association is the object clause, which basically defines what are the activities and the objectives for which the company was incorporated, and a company is allowed to only do those objects for which it is incorporated and not anything more than that, because if anything more than that is done, it will be considered as an ultra-vires act. Okay, please take 2 minutes, go through this, and then we proceed. Any questions, please ask me. Any questions, please ask me. Please take another minute. Please take another minute, please. This is a very important concept, the Doctrine of Ultrawise, which is associated with the Memorandum of Association of the company. Let me know once we're done. Okay, let's move on. Now let's look at the difference between ultra-vires and an illegal act. An ultra-vires act is entirely different from an illegal act. People often mistakenly use them as synonym to each other while they are not. So basically, when people talk, they very loosely use the words ultra-vires and illegal together, but actually there is a major difference between both these terms, and both these terms are not the same. Anything which is done beyond the objectives of the company as specified in the Memorandum of Association is ultra-vires. So simply, if you do any act which is beyond your powers, it is known as ultra-vires. It need not necessarily be illegal. Okay, it just means if someone has done anything beyond his powers, then it becomes ultra-vires. It does not necessarily become illegal. However, anything which is an offense or draws civil liabilities or is prohibited by law is illegal. Anything which is ultra-vires may or may not be illegal, but both the acts are such void ab initio. So basically, the similarity between both of them is that an illegal act as well as an ultra-vires act is void ab initio. Void ab initio means void right from the beginning. And like I said, ultra-vires act need not be illegal, but an illegal act is always an ultra-vires act. Okay, but it's not vice versa the same. So anything done beyond the powers is known as ultra-vires, but anything done which is an offense or draws civil liabilities or is prohibited by law is illegal. Okay, so that is the difference between an ultra-vires act as well as a illegal act. Okay, so do you have any questions here? Anyone? Any questions? The difference between illegal act and an ultra-vires act, this is an important question from the exam point of view as well. Please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Please take another minute. Any questions, please ask me. Let me know once you're done, please. Are we done? Okay, now let's look at the provisions in the Companies Act with regard to an Ultrawise Act. Section 41C of the Companies Act states that all the objects for which the incorporation of a company is proposed or any other matter which is considered necessary in its furtherance should be stated in the memorandum of the company, in the MOA of the company. Whereas Section 245(1)(b) of the Act provides to the members and depositors a right to file an application before the tribunal if they have reason to believe that the conduct of the affairs of the company is conducted in a manner which is prejudicial to the interest of the company or its members or depositors, to restrain the company from committing anything which can be considered as a breach of the provisions of the company's memorandum or article. So basically, here also, if it appears to anyone that the company is doing anything which is beyond their memorandum and articles and which is prejudicial and detrimental to the interest of the company or the members of deposit, then the people can file an application with the tribunal and following steps can be made. So please remember, now these things are being said to you because to highlight to you how important the MOA and AOA are with regard to a company and where do they stand. Any act done beyond an MOA is known as ultrawise and it's invalid and void. Any act which is done beyond an AOA and MOA, if it appears to the members and the depositors that it is being done in a way which is detrimental to the interest of the company or prejudicial or negative to the interest of the company, they can file an application with the tribunal if they have reasons to believe that the conduct of the affairs of the company is not being done in a proper manner. In this case, the tribunal will look into the matter, and if it finds it right what the claim the members and the depositors are making, it will give a judgment accordingly. So this just shows you how important the MOA and AOA are, and the company is required to work within the framework given by the MOA and AOA. Okay, please take a minute to go through this. Any questions, please ask. Any questions, please ask me. Please take a minute more. Any questions, please ask me. Any questions, please ask. Okay, now let's look at the next principle, that is the principle regarding the doctrine of okay, we are continuing with the doctrine of ultrawise. Basically, the shareholders cannot ratify any ultrawise transaction or act even if they wish to. So basically, if the company carries on any activity that is beyond the scope and powers provided in the MOA, object clause of the MOA, then even the shareholders cannot ratify such a transaction, okay, even if they wish to. Where one party has entirely performed his part of the contract, reliance on the defense of ultrawise was usually precluded in the doctrine of estoppel. So normally, if any third party or external party has done any act which is not within the object clause of the memorandum of association, then it absolves the company from the responsibility. The company is no longer responsible towards the act, and that other person should be responsible. And then this is where the doctrine of constructive notice comes in, that he should have read the MOA and AOA and then taken the decision accordingly. Where both the parties have entirely performed the contract, then it cannot be attacked on the basis of this doctrine. Any of the parties can raise the defense of ultrawise. So basically, the ultrawise defense can be raised either by the external party or by the company, as the case may be. If a contract has been partially performed but the performance was insufficient to bring the doctrine of estoppel into action, a suit can be brought for the recovery of the benefits conferred. Okay, if a contract has been partially performed but the performance was insufficient, the doctrine of estoppel can into action. A suit can be brought for the recovery of the benefits conferred. If an agent of the corporation commits any default or tort means civil wrong with the scope of his employment, the company cannot defend it from its consequences by saying that the act was ultra-wise. Okay, so these are a few more pointers on the importance of the doctrine of ultra-wise. Please take a minute, go through this, and then we go on quickly to the next doctrine. Please take a minute. Any questions? Please ask me. Let me know once you're done, please. Okay, so with this we will be ending the doctrine of ultra-wise. Okay, so quickly next we'll have a look at the doctrine of constructive notice. Okay, and then the doctrine of indoor management. These are two more doctrines that are connected with the memorandum and articles of the company. Okay, now doctrine of constructive notice or knowledge. Every outsider dealing with the company is deemed to have notice of the contents of the memorandum and articles of the company. These documents on registration with the registrar assume the character of public documents. This is known as constructive notice of the memorandums of articles. So like I told you, right at the incorporation of the company, you are supposed to submit the MOA and the AOA with the registrar. And if he finds it okay, he will approve it and he will incorporate the company. Please remember, right at the time when the company is incorporated or registered, the MOA and AOA of the company become public documents within section 399 of the Companies Act 2013, which simply means anyone who is dealing with the company, a vendor, a customer, a banker, an investor, or anyone can obtain a copy of the MOA and AOA by paying a nominal fee to the ROC, and he can obtain a copy. And that external person who's said to be working with the company is deemed to have read the contents of the MOA and AOA and also understood the contents of the MOA and AOA. Okay, so that is what you mean by the doctrine of constructive notice. That means the people dealing with the company have a constructive notice of the contents of the MOA and AOA, and they have also understood that and based on that understanding and knowledge, they have gone ahead with the transaction with the company. That is what the doctrine of constructive notice means. Okay, then the memorandum and articles of company are open and accessible to all. It is the duty of every person dealing with the company to inspect these documents and see that it is within the powers of the company to enter into the proposed contract. So like I told you earlier, these are public documents under section 399 of the Companies Act. So any person dealing with them has to obtain a copy of the MOA and AOA and see that whatever transaction the company is intending to enter into, it is well within the powers, because if the company enters into a transaction which is not mentioned by the MOA, then it's the external party who will suffer, not the company, because the doctrine of constructive notice protects the company from the outsiders, not the outsiders from the company. Okay, please take 30 seconds, go through this quickly, and then we proceed. Any questions, please ask me. Please take a minute. Any questions, please ask me. Okay. Section 399 of the Companies Act provides the inspection, production and evidence of documents kept by the registrar. It provides that the memorandum and articles, when registered with the ROC, becomes public documents and then they can be inspected by anyone on payment of a nominal fee. Like I told you, they become public documents under Section 399 of the Companies Act, and anyone can pay a nominal fee and obtain a copy of the MOA and AOA from the ROC. Therefore, any person who contemplates entering into a contract with the company has the means of ascertaining and is thus presumed to know the powers of the company, and has the means of ascertaining and is thus presumed to know the powers of the company and the extent to which they have been delegated to the directors. In other words, every person dealing with the company is presumed to have read the documents and understood them in their true perspective. This is known as the doctrine of constructive notice. So like I told you, a doctrine of constructive notice is simply putting in that because the MOA and AOA are public documents, once they are registered, every person dealing with the company is presumed to have knowledge of the contents of the MOA and AOA, and also they are assumed to have understood the contents. And based on their knowledge and understanding only, they are going ahead and entering into a transaction with the company. Later on, they cannot use the excuse saying that, no, I did not know the contents of the MOA. No, they are deemed to have a constructive notice of the MOA and AOA simply because they are both deemed to be public documents under Section 399 of the Companies Act 2013. Please take 30 seconds, go through this. Any questions, please ask me. Any questions, please ask. Okay, then the memorandum of association and articles of association are two most important documents needed for registration and incorporation of the company. The memorandum of association of the company contains its fundamental conditions on which alone the company can be incorporated. According to Section 256 of the Companies Act, defines the memorandum means the memorandum of association of the company as was originally framed, or it is altered from time to time. So basically, whenever in terms of the Companies Act 2013 we talk about memorandum and articles of a company, it means the memorandum or articles of the company as submitted to the ROC at the time of incorporation, or the one that was amended from time to time and registered with the ROC. Please remember, if there is any change in the MOA and AOA and the same is not registered with the ROC, then the change cannot take effect. So any alteration in the MOA and AOA have to be submitted or filed with the registrar of companies within the allotted time. So your MOA and AOA will mean either it could be originally filed or the one that is altered from time to time. According to Palmer, the Memorandum of Association is a document of great importance in relation to the proposed company. It contains the object for which the company is formed and therefore identifies the possible scope of its operation beyond which its actions cannot go. So that is to do with the Memorandum of Association. Please take about 30 seconds, go through this, and then we proceed. Any questions, please ask me. Okay, the Articles of Association of a company are its bylaws or rules and regulations that govern the management of its internal affairs and the conduct of its business. According to Section 2.5 of the Companies Act, articles mean the articles of a company as originally framed or as altered from time to time in pursuance of any previous company laws. So similarly, like I told you, articles also could mean the original article submitted at the time of incorporation or the one that is altered from time to time. Both Memorandum of Association and Articles of Association are public documents according to Section 610. These documents become public documents as soon as they get registered and can be accessible by any members of the public under the provisions of the Act by paying a nominal fee to the ROC. The rule of constructive notice extends not merely to memorandum and articles but also to such documents as are required to be registered with the Registrar of Companies. This is, however, no constructive notice no constructive notice of documents which are filed with the registrar for the sake of record only. Okay? Take 30 seconds, go through this, and then we proceed. I have explained this to you, so I'm not doing it again. Any questions? Please ask me. Okay, now we'll come to the doctrine. We're coming to the doctrine of indoor management. The effect of doctrine of constructive notice is harsh on the outsider who does business with the company. An outsider who dealt with the company is deemed to have a constructive notice of the contents of the documents of the company. An outsider cannot claim relief on the ground that he was unaware of the powers of the company in case of ultrawise. So like I told you, according to the doctrine of constructive notice, every person or outsider dealing with the company is deemed to have knowledge about the contents of the MOA and AOA and has also presumed to have understood it. So tomorrow he cannot use the excuse that he did not know the contents because they are public documents and he's supposed to have gone through them. So this made the situation a little harsh for the people who were doing business with the company, and that is what gave rise to the doctrine of indoor management. The doctrine of constructive notice is more or less an unreal doctrine. It does not take into notice the realities of business life. People know a company through its officers and not through its documents. See, when a person keeps on doing business with a company over and over a period of time, he does not check the documents anymore. He starts dealing with people. He starts building relationship with people and not with documents. So he starts doing business with the officers of the company and not really the documents of the company. All right? Yeah. Please take 30 seconds. Go through this. Please take 30 seconds. Go through this. Okay, now let's move towards the doctrine of indoor management. As criticisms of the doctrine of constructive notice grew, the new theory known as doctrine of indoor management has been evolved by the courts. The doctrine of constructive notice seeks to protect the company against the outsider, whereas the doctrine of indoor management operates to protect the outsider against the company. So as and when the criticism against the doctrine of constructive notice kept on growing, another doctrine known as the doctrine of indoor management came up. So the doctrine of constructive notice aims to protect the company from outsiders, whereas the doctrine of indoor management aims to protect the outsiders from the company. Firstly, the memorandum and articles of association are public documents open to public inspection, but the details of internal procedures are not open to public inspection. Hence, an outsider is presumed to know only the constitution of the company, but not what may or may not have happened in the doors closed to him. So that now we'll come to the doctrine of indoor management. Now, the doctrine of indoor management simply says, even though an outsider dealing with the company is presumed to have knowledge of the contents of the MOA and AOA, but he can only know the contents of the MOA and AOA, but there is no way he can know whether the internal procedures, rules and regulations relating to that company have been followed, because he's not given access to the board meetings, to the general meetings and all that, right? So that is why the doctrine of indoor management came in, where it said that even though the outsider can have knowledge of the contents of the memorandum and articles of association, but he cannot be presumed to have knowledge whether the internal procedures mentioned in the MOA and AOA have been carried out. MOA and AOA have been carried out, and it will be presumed that the internal procedures have been carried out. So that is what the doctrine of indoor management is. So with this, we have seen the importance of all the MOA, AOA, the various doctrines of Ultrawise, the various doctrines of constructive notice, and the doctrines of indoor management. Okay, so I hope you found the session useful. Anytime during the session or anything, if you have any questions or queries, you can always get back to me, and I will be happy to address your concerns. Okay, so thank you so much, and I will see you again with some